Hello everyone, welcome back to another Go charting video. In today's video, we are going to see how we can find out or identify high probability entry zones or pullback zones when we are in a trending environment or we have been having trend days for the past day or two, or let's say that we have broken out of a balance zone or a consolidation zone as we generally see on a candlestick chart. So to start with, what I have on my charts is the Bank Nifty chart. So this I have taken because we have had a recent breakout over here out of a consolidation zone or a balancing zone, if you can say that, if for people who use volume profile and market profile. And if you've seen my video a little time back of regarding the internal clock of the market, so I spoke about something when we see a consolidation, something like this. So this was a breakout uh, which had happened a few days back, and what we discussed that day is in Bank Nifty. So you see this, what has happened in the recent past, and this happened. So what we mentioned over there is generally a 3 to 4 day period is where we see a consolidation, and if it has to move up, it moves away from that balance zone again. So what we've seen off late is we were in this zone and then we broke out and we consolidated, or you can call balanced, in this zone, and you see this very close. I'll just get the rectangle tool out also. So if you've not seen that video, you can go ahead and check that video out. So this is a zone which was really interesting. So you see these POCs, a lot of volume cluster taking place here. Again, you can merge the profiles to the left and see what I'm talking about here, and the market broke out of here. Now again, it does sound a hindsight as of now. So what do we do now? Okay, so let's forget what has happened as of now, and let's see. I'll just delete this, and we can then start again. Okay, so we've broken this out. So if, for example, the next time you see something like this and you see a breakout, this was the zone where you could have probably entered. There were a lot of places actually, and you could have entered somewhere. Let's say I'll just get it out. So it was just a minute, and this was the place, this was the place, this was the place. So let's forget what has happened in the past. We'll dwell into this a little later or in some upcoming sessions. Now this is a breakout of the balance zone. Okay, now it is too late to go long here, absolutely. Now how do we identify the pullback zones? Okay, so sorry for that. So what we're going to use is we're going to use volume profile, we're going to use market profile, and we are going to use the footprint charts for of course identifying these zones. Now first of all, when you look at the volume profile, you can straight away see things like this. Okay, so just let me get a black marker out so that we get better indication. So you can see things like this. Okay, these are the low volume nodes. So these becomes of course good zones to enter the pullback zone. But how do we identify which are the good ones or which are the ones that are going to hold? So if you see this is a low volume node, this is a high volume node from where the breakout took place. Similarly, this is a high volume node, and so on. Generally what we do is we try and enter around the, you can enter. Now there are two strategies what people generally deploy. One is entering around the high volume nodes and keeping a point just below the low volume node as your stop loss, because low volume nodes are places where the aggression took place, or rather there was no volume traded, because the point just before that is where the initiative, or you can call the strong money, or whatever the money that really wanted the market to go up took their position. So for example, if you see this low volume node over here, that is this place, what you saw here was some sort of aggression in the bar, in the start of the bar. So that is why I say that this is the place where the aggression came from. So if you look on a footprint chart, you will see imbalance zones forming here, or a high volume cluster that pushes the market up. So this becomes a good place. When the market approaches this zone, you can expect the money that caused this move to take the market up, or at least go in your favor for another, let's say 100, 200, 250 points, and so on. Now let's consider if you are an option seller. Okay, so at this point, even if you are directional at this point, so this is a point where it can or cannot go up. So how do we know about that? So one common trick that I generally use, or I ask people to do, is where the start of the move, or let's say for this move up, I can safely assume that this is the point where the move started, or the buyers started stepping in, and they didn't cause a considerable pullback zone. This is one zone, but again, this is the move from where I saw a considerable up move, and it has been going up for 3 days together. You can consider this as a pullback, of course, but you have to consider the point that it was already an up, a gap up, and then it just came here to test the zone before that, that is this zone, and the up day of this particular profile, and then it moved up. So what I generally do is, when I am into this and you are in a positional trade, you can go here and simply create an anchored VWAP with some standard deviation. So what it does is, so if you see, this is the place where generally the market has been taking support, and it will keep doing. If it is a strong trending market, you will see this. So it makes sense to trade pullback zones in markets or trending zones environments like this. If you see this particular VWAP, anchored VWAP, to be slightly flat, it is not an area to actually trade a pullback zone. You'll be better off solely trading on let's say the low volume zones, or the zones that we identify from the footprint that we'll just do in a little moment. Okay, so at this point, this is a confluence zone. If you look, this is the low high volume node, and it has been taking, these are all confluence zones. Now let's get into the part where the market is right now. Okay, so it has gone above the 2 standard deviation. Before we go further, a lot of you guys will ask me doubts, so I am just so what I have is, here is, I've just switched on the second and the third deviation. Why I have done that is because I don't want to take trades of second and third deviations. Of course, they are also they work a lot of times, but I would rather prefer the volume profile and the footprint charts to identify the clear zones where to take entry from. Why have I switched on the second and third standard deviation? Is to let me have a picture of where we are standing right now. So we are between the second and the third zone. So I wouldn't, even if the market opens gap up, I am not sure that how long the market can continue in this uptrend mode before it takes a pullback. So my first aim, or first task, is to identify a zone where I can actually get a decent pullback of at least 200 to 250 points. So the first zone that we just spoke about is this low volume node. And again, I just told you why we look at these low volume nodes is because I've seen a big aggression happening over here. Okay, a big bar, of course. Now that is not enough. I will go into the footprint charts and explain why I am saying that. So I will wait for the market to come into this zone, and then what I want to look at footprint we'll just discuss. And the other zone, of course, is now if you're looking at a stop loss, let's say you want this high to be tested from 500, you want 150 to 200 points. So what you will do is you will have, let's say, a 80 to 100 point move to the downside. So a low of the bar, if you're looking purely at volume profile candles. Okay, now let's get into the footprint chart and see what was actually happening on these bars. So this is a 15-minute chart bar, and this is a 5-minute bar. So I've just done it so as to identify or look at these zones or these bars more clearly. Okay, so when you go into footprint, you can do the same thing. You can turn down these footprint candles into 5 minutes bar, 5-minute bars. Now the zone, if you look clearly, is this one. Okay, so of course these are stops that got triggered, people who wanted to go short here, and they got triggered. So, and the market continued. And the interesting part is the other zone that we found here. There was a question from someone who asked me, is how do you look at these zones, and would you trade when the market comes here? Of course I wouldn't, but I wouldn't go short here. Why? Because when I see a cluster like this, okay, and the market unable to take this cluster when the buying is coming in, so this can be against stop losses or initiated buying, we don't know for sure. But if the next bar isn't able to take out this cluster with these high aggressive buy orders, you can see the delta over here on the right side, and the market go above of that. So this is the first indication for me that this is not a zone to go short. Firstly, I will wait for a confirmation to go short. I will just tell you what I'm looking for when I'm good in trying or looking for a short. And when I have broken out of a balance area that we just saw, I will never look to short. The first instinct that you should all have is to look for a pullback and take a long entry, because the first pullback will always give you good points, even if it is a trending market and it is planning to reverse or such a fierce move on the upside. is generally followed by a lot of consolidation before the market decides. So if you've not seen my internal clock of the market video, I've discussed this in continuous POCs also. So the next thing that I'm seeing here is, look at this zone. Okay, so when the market first breaks out of this zone, let me just mark this. Look at these stacked POCs, or I call them continuous POCs, in the same zone, and the market takes a direction on this side. So the first thing you do is you try to identify a pullback zone in this zone rather than going short, because this is an indication again that the market is going up and it is going with a lot of aggression on one side. So unless this zone breaks or we form a similar zone on the upside, we shouldn't be looking for short. We should rather be looking into pullback zones. Now it is easier said than done to look for breakout trades over here. It is very difficult unless until you're a scalper and you've gone into smaller time frames and you've made use of it. But if you're looking at taking 150 200 points, this move is very difficult to capture. The only thing you can do is actually look for pullback zones and capture those zones. So as I said, this is the zone that I'm looking for. That is 45,500 on 48,500 on the footprint chart or the futures chart. Just remember, this is not the spot chart, this is the futures chart. This is the place where the volumes are actually transacted, the orders are really actually punched. Okay, now let's go into what happened just before that. So you see this breakout zone, this has happened with an imbalance. Okay, now this gives me a sort of hint that we might just continue this breakout on the top, and this is what has happened. And you see this whole thing is just full of, again, positive delta. It's again could be stops, could be initiative buyers. The only way we know that this is initiative buying is from all this. Okay, this has just happened and the market has not even given a decent pullback. So now again, this is the place where I'm looking for to enter my first pullback trade. What I'm expecting is, whenever I'm sorry, this 48,500, whenever the market approaches this zone, what I'm expecting is the market at least to touch this 48,600 and zones above that if possible. The other place where you can I mean, look at a pullback, or if you're a small small or a smaller time frame trader, for example, you're looking for just 80 points, or a scalper looking for 20-30 points on a 10-20 points on an options chart, is this one where you can expect a sort of a pullback, or when the market approaches this zone, it goes up. Okay, now I will just go into the market profile. Even for people who are new, I will just try and explain why I'm looking at this zone. Okay, so this is the market profile. This gives you an indication of the time component which we generally miss. So this zone that you see, the magenta plotted zone, is nothing but a single print zone. So what we are expecting is, so there are three confluences that we have drawn, one from the volume profile, one from the footprint chart, and they're almost similar. You can just follow one and still get the same results. So what we're looking at is, if you look at this zone, this is the end of the single point zone, and it is exactly matching at 48,500. So what I'm expecting is, when the market reaches this zone, it will give me a sort of pullback. Okay, why? Because of the context that has taken place. Now, not always does these the other term for this is, generally we call it spike, because it was late in the afternoon. So we generally wait for the market to show its hand the next day. That is whether it's accepting this spike or not. So if it is not expecting the accepting this spike, what will generally happen is, first thing is, it will open gap down over here, and it will go down and test this zone, and then decide what to do, like this, or something like this, and then fall down. Okay, the second thing what we can expect is the market to open right here, gap up, or right here if it opens flat, and go here, and again go back up here, which is what we are hoping it happens, and this is the highest probability that I think can happen. The other thing that can happen is, market opens somewhere here. Okay, it tries to take out this zone, okay, this high volume cluster over here, that is somewhere close to 650 or 600, and it goes down and tests this zone. Okay, so if you look in a footprint chart, you will see exactly what I'm trying to tell. So let's say the market opens somewhere here. Okay, what it does is, if it opens somewhere here, it tries to go up till here and comes here, then goes down here and tests this zone, and then go up. Okay, so this is another option that the market can do, and this is something of this sort is what we're expecting. that is the market, whenever it approaches this zone, if it even opens here, let's say somewhere here above this, what we can expect is another up move over there. But this is a move that we cannot be sure of, because again, this is above the second standard deviation as we just saw in the VWAP part. But what we are expecting is, what we want the market to do is do something like this, so that we can initiate a long trade and a pullback trade. Now, why am I saying, let's go back to the market profile, why am I saying that we are hoping that this particular spike or this single print zone is going to hold? Okay, it's because of the context. So if I go back to the market profile chart as well, so we discussed this in the opening few sessions, or opening few minutes of the session. So if you look at this, I'm seeing a bullish context, the balance zone breakout, then another balance zone breakout, and so on. So if I have to look, let's consider this is a Nifty chart. So if let's go to a Nifty chart now. If I have to look at a similar situation on a Nifty chart, okay, so I will just get the Nifty chart out, and if you look over here, what I see over here is it's not the same. It is still balancing. So the Nifty is expecting a breakout, but we don't know for sure that it will break out in the same manner that Bank Nifty did. So if you look at the Nifty profile, what I'll do is I'll just reduce the tick size as well. So a lot of people ask me this question. So I've done a video on this also as to how you can adjust the tick size. So if you look at the Nifty, it is still balancing, and I wouldn't want to go long here. I would rather prefer Bank Nifty. Why? Look at this. Okay, so the zones, we just spoke about a scenario in Bank Nifty where we said it is like in the second or between the second and third standard deviation, and if we've approached this zone, how we can expect a breakout. Now, this is not a context which is similar to Bank Nifty. We've had a zone where we had a bulging profile over here, and we'll just go into the footprint charts as well and see what was happening here. Of course, this took a reversal, but what happens the next day is this zone, this spike zone, I will just delete all this. So this late market move, okay, so this is a zone. If you look in market profile also, you will find it there. Now, this is a zone below which the market opens. Okay, it opens gap down again. It fills in this low volume node area, which is very common in a balancing scenario like you've seen over here. That this is the fifth day that the market is balancing over here. It's very good for option sellers, of course. So till the time market is in zones like this, you can straight away, your triangles will always work, your straddles or your iron condors will always work. Only if you can always incorporate, if you're an option seller, the context as well. So only if it breaks out will your iron condors and or your triangles will start hurting you, which of course with the help of footprints and market profile and volume profile you can get to know a little earlier. Okay, so let's get back into this. So this is a zone which is holding. Now I don't know whether I can expect the same amount of confidence going into a long. What I'll do is I'll enter the footprint chart as well, and I'll show you what was happening here. So again, this is the zone. If you see, I was talking about the delta profile. So whenever I'm looking for a long, if I'm looking for a long in Nifty, the first zone I'm looking at is, you look at this continuous POCs during which the market has broken out. Of course, it is not as strong as Bank Nifty, and maybe this breakout is because of Bank Nifty. We don't know, and we should not care actually. But this is the continuous POC zone, or the big chunk of all the POCs were accumulated here, and the market did break out of this successfully. So if I'm looking for a long trade, this is the place where I will look for a long trade, and my target will of course be if you're looking, this is 575, so it will be hardly 40 points, and my stop loss will be 20-25 points. Again, 1:1.5 or 1:2 is what we're expecting. But Bank Nifty is what is going to give me a higher probable trade looking at the context. Okay, now what I just explained is, when the market comes out, what am I looking at here? If it is a Bank Nifty chart, I will just try to find. Okay, so this is a bar I want to look for. Okay, so this is the delta profile. I've been telling this a lot of times. This is a bar I want to look for, a down bar, and a lot of sellers coming in, getting trapped, and the other bar, the close of the bar right next to the POC, and the other bar just taking out this zone. So even if you get late, you will generally get another entry like this. Okay, and the market goes up. If the market is too strong, for example like Bank Nifty, it will go up in one shot only, because it is a pullback. So you can identify these pullback zones depending on the context which we have just discussed. So for Nifty, for example, the pullback zone is clear, but again it is not that highly it is a good trade, but again, if you have a choice like you have in the present scenario, you should always prefer Bank Nifty, where you will get the pullback trade, or the 150 or 200 points very quickly and with a higher probability. So hopefully this video was of some help to you guys. Until next time, thank you. Bye bye.